All right, welcome back to Trading Corner. A lot of news, not a lot of price action. Uh, what do you think happens from here? I'm kind of in. I got a couple of views, but nothing particularly like max conviction.
Yeah. Well, yeah, firstly, I guess the election was the big news between now and the last time we spoke. So quite interesting that it seemed as though a lot of the more macro style traders, not just oil specific, to be honest, everyone that trades equities all the way to FX, etc. It seemed as though they'd kind of put on a Trump trade in the end.
Yeah.
Which I was a bit surprised by. What were you thinking?
I mean, if you're talking about risk assets like equities and Bitcoin, which ripped, right? I think that there was certainly this notion that if Trump won, risk assets were going to rally
Yeah.
quite hard. I think the real uncertainty was that Trump, I guess in hindsight, it seems obvious that he was going to win a pretty decisive victory based on everything we know now. But at the time, the polls were saying it was a coin flip. So
Yeah, and it felt like it, right? Right into the last kind of.
I personally thought it was going to be, I guess we don't really take Bitcoin risk here at Onyx, but I personally was positioned for a Trump win because I believed that polls now through 2 election cycles have underestimated his support. And the reason that I believe why they do so is because Trump voters have demonstrated that they are less likely to respond to a pollster than Democrat voters. So there's no way that you can correct for that as a pollster. You can't statistically adjust for bias in the samples that won't respond to you. So I assumed that it was just going to happen again. And so if he was polling better than he was in 16 and 20, he was going to outperform again in 2024, and he was polling well enough that outperformance meant winning the election. So personally, I positioned for it. There's no real good way to position for it in oil. I guess I could, sit here and try to do a victory lap, but I guess it doesn't really matter that much for our market, right?
No. So I mean, on the election day, we kind of had this initial sell-off on flat price. I guess generally, you kind of have to suggest that Trump is a lot more energy independent than kind of any other administration.
Yeah.
You would suggest that he's going to probably start increasing shale oil production. He's going to be putting, I mean, maybe not so much on oil products specifically, but his tariff strategies are going to probably start looking a bit more aggressive. Potentially, all this, all the insurance issues with Russian cargoes, that might kind of start softening. You might see a bit more Russian flow into the Western countries, and again, the Middle East tension that might start softening as well under his reign. But so we had that sell-off, and then it was initially, it looked weak in the morning, and then into the afternoon when the US came buying, when the US came in, they were all buying, and it outperformed the sell-off that we had in the morning.
Yeah.
So I don't think we can really read too much into that personally. I think probably a lot of, as we spoke about last time, when you get some kind of definitive, information or whatever it is, in this case, we now know who the next president is, it actually might lead to people taking off positions rather than putting on positions.
Yeah, I agree. And the market's super short futures, or at least specs are short. So I think there'll be buying pressure. I actually have kind of a contrarian view on this. I think Trump is going to be short-term bullish for flat price. And the reason why is I think that in the Middle East, the Israelis now have a window of time for, let's call it a month and a half, when during the end of Biden's sort of lame duck president period, his lame duck period at the end of his presidency, where they can just go for it without a lot of recrimination, really, because they have an ally coming into the White House. That's bullish. I also think Trump's going to go super hard on Iran. He already has once. Maybe he won't just maybe he'll try to shore up some production from other Middle Eastern allies or try to get OPEC to loosen up a little bit before he's goes back deep into the Iran sanctions. But I think, at least 1 million barrels a day of Iranian oil are going to come off the market pretty quickly. I think tariffs are generally bullish freight. I think that there are all these sort of, I do think that there's the threat on the table of Russia, like more Russia sanctions, in order to coerce them into a deal with Ukraine to end the war. But ultimately, Russia's already pumping and exporting max, right? So
yeah, I mean, they're kind of here and there with their quotas. I think they were restricting gasoline exports for a while, and now they're back on. So yeah, it's kind of toing and froing there. But I think, I do see your point. As we kind of finish out the year. Obviously, the chance of that happening, as you said, we've got a window for it
and
to happen.
positioning too. Like anything bullish happens right now and you get a massive short squeeze. If nothing bullish happens, like you probably have people taking off risk into year end, which means buying.
Yeah. No, it's true. It'll be quite interesting. I mean, if we're now to focus on the swaps, that's the futures, and it's always met with a bit of noise and as to positioning, speculation, etc. But if we're actually talking about the swaps, for us, the last 7 trading days has been so quiet. I mean, at the beginning of last week, end of the week before, I was kind of thinking people are just going to sit on their hands until the results come in, and then perhaps they'll have a bit more confidence. But the rest of the week last week, really, really quiet. Even today, this morning, it's been super, super, risk off. I think people coming into hedge when they have physical exposure, not necessarily looking to get hugely leveraged here, which you could put it down towards we're being towards the end of the year. Maybe there's a lot of just noise geopolitically. You've got OPEC kind of looming at all times. Margins are doing okay though. We've had a total steadying of the margin. I think the last 2 weeks have been within kind of a 20-cent range, which should help refiners actually to come out into the market and kind of lock in some prices here. But really, we're not seeing much of anything.
Yeah, I mean, I guess it's that time of year, right? And markets hate uncertainty. So I would, like you, I would have expected more of a flurry of flow after the election. But now I think going into year end, either nothing happens and we remain in this sort of tight, unexciting range, or you get something mildly bullish that triggers, end of year's like CTA twilight zone time, right? When everybody else is kind of unwinding their risk and, trying to preserve profits for year-end bonuses. The only people left really gunning for it are the CTAs. So I think if you get any bullish catalyst, of which I can think of a few, I think that triggers a pretty solid unwind, and you can end up with one of those like nonsensical $10 rallies into the end of the year.
It is looking, if we're looking at patterns and kind of regionally how each kind of market is behaving, the US are definitely coming in stronger than all other areas. So, in the morning, we're seeing a lot of softening in Asian crude benchmarks specifically. The Dubai crude prices have really dropped down around $1 from last month. So that they are definitely softening. However, we are getting strength in East-West products. So gas oil particularly is holding. We had the rally kind of about a week or so ago, but it is maintaining these levels. Same with gasoline, East-West. So there's a bit of a mixed picture. We have product strength in the East, crude weakness in the East. And then you look at the US, and it looks like they are fairly happy to buy everything, to be honest. It's kind of every open we're expecting,
US buying.
US buying, yeah, exactly. Constructive price action.
What type of participants are buying on the US Open exactly? Is it like US refiners buying flat price, or buying what exactly? Buying dated?
In my opinion, so actually a lot of this is not transferring that well into swaps.
Okay.
So in my opinion, a lot of it is coming from kind of funds.
Oh, I see what you mean.
The CTAs. I think actually last week especially, a lot of what we saw was people unwinding their oil shorts.
Right.
And potentially buying equities off the back of that, because funds.
Oh, so like index rebalancing, like you're a big passive manager and you have to get out of, I guess that's month end type stuff, like out of equities and into commodities, because equities have outperformed commodities during the month of October.
I think we saw a lot of that last week. This week, let's see, maybe they're done rolling and it'll be kind of a fresh slate. But it definitely did feel like that, kind of as the dollar was strengthening, oil was weakening, and vice versa.
Yeah. I mean, oil can perform. It's like an episodic macro asset. It can perform like a risk asset for certain time periods. And maybe that's what's going on here. Like maybe this Trump trade, this risk asset rally will, the rising tide will lift all ships, including oil. Fundamentally, I don't think Trump actually is going to matter that much for crude oil production in the United States. Like, okay, sure, they could grant some federal, drilling leases. And I guess there's always talk about whatever the oil reserve is in the Arctic wildlife reserve with an ocean of oil underneath it. I forget what oil that's called, but great. It's Alaskan North Slope they could get more of. But to me, it's like, I don't think you're going to get much more black oil out of this. I think you're going to get LNG export ban lifted. The natural gas system is going to be impacted. I think you probably have some renewables markets that are going to have huge moves, but that's not really something I
No,
understand that
and
well.
again, these things take a lot of legislation and therefore time. So I don't think it's going to be something we're going to see in the next kind of 4 to 6 months. I think if anything, it's going to be at the tail end of 2025, potentially into 2026, where we're seeing real structural supply and demand changes.
Yep.
So I agree with you. I don't expect that really to kind of have any real weight onto our market at the minute. But the light product stuff is interesting, right? Especially as we're going into the colder seasons. So I think last year the Texas freeze was a huge headline for propane especially, but also crude. We had a lot of the infrastructure that crude's carried in, so the pipelines, we had some problems there. There was some cracks forming, which led to a huge crude run up. So it's something to be aware of again this year. I think it was still fairly mild right now, but maybe into December, January, February time, we could potentially expect some kind of stimulus to all these contracts.
Yeah, I agree. If you get a huge crude run up, either for weather related, policy related, sanctions related, or Middle East related reasons, I think you fade it with both hands. You sell all you can. Because I think like structurally the crude market is just oversupplied. The energy transition is going faster than everybody expected. I don't know, I'm an old man now, but like I remember back in 2015, 16, like the projection was that EVs would account for like 5% of the fleet by 2040 or something ridiculous. And they're already past that in 2024. So it's like, what year is it again? Anyway, so basically I'm not structurally bullish oil. I just think that you play for a short squeeze and then use it as an entry point to a short trade.
Yeah, I think you're probably right there. It'll be interesting either way. We've still got Black Friday coming up for Thanksgiving. That always tends to be quite an interesting day.
Why is that? I've never heard of this.
Oh, it's just, well,
I mean, I've heard of Black Friday.
yeah. So typically when the US kind of, go off on holiday, and it's a perfect time to kind of squeeze the other side of the market.
Oh, I see.
Essentially. So if the market is short, perhaps this year we'll see a bull run instead of a
Oh,
short
I see.
squeeze.
Like just the trade houses going for it. Oh, it's interesting.
Yeah, it's always quite,
Yeah.
There's very few people that remain on the desk, and I guess they like to take advantage.
I think that could be the story of the whole month of December too. It's been, for the funds, anecdotally, it's been a bit of a rough year for crude oil people just because of how little price action there is. Like you need volatility to make money, and this year has not been a volatile year.
No.
So, I mean, there's been enough volatility to stop people out of attempted breakouts, right?
Yeah.
Attempted range trades. Like it's been kind of like random noise in a tight range. When people start getting into the range mode, they'll get blown out to the downside or the upside in May or October. And then if you try to play the trend, then it'll just like blow you out by ranging for months. So I don't think people are really hanging on to a lot right now.
I totally
think
agree.
I think you're going to see like a very gappy, illiquid, under-participated market in December, which is again, like we talked about, a recipe for position unwinds.
Exactly. I mean, you can tell it in people's market behavior right now.
Yeah.
I think
Not doing much.
Everyone's risk off. We're kind of towards the tail end of that small bull play that I was talking about as well and dated. So I think we're now in a position where we can truly reset.
Yeah.
As I said, the Dubai pricing has really softened. Whether that's going to filter in through to dated, it feels like the market wants it to. It's been, this is just from my perspective as well, it's been a constant struggle to keep that bull strength going.
Yeah.
So I think we still need a bit of a flush somewhere. Let's see if it comes from the swaps now. So after this week is done, I think really we could start weakening in dated.
Cool. Interesting call.
But products, I don't see products going anywhere. I think we're probably going to remain in this range, to be honest.
Such an unexciting call, but I agree. I think it's like you want something to happen, but it's just not gonna.
Exactly.
That was one of those, I don't know, when I was a lot younger, a good trader once told me, you don't always have to have something on. Like now is one of those times where I'm not sure there's a ton of bang for your buck in linear products or
it's
the
probably
major cracks, right? It's probably a good time for options. Probably a good time to keep selling options.
Or a great time to range trade. I think if you're patient and you're able to kind of, define what you think in your market is the range and be happy to kind of oscillate around those sorts of levels and not get too frightened when it kind of breaks through. then I think you'll probably do well into the end of the year. I think potentially next year, when we get a bit more certainty over OPEC, what Trump's policies are going to be, potentially get the freeze out of the way, maybe we can then move into a trending market.
Yeah.
But I don't think it's happening yet.
All right. Be at our desks, fading every rally and sell-off.
Let's see.
What do you think the first move is, just to finish on this note? Do you think the first move is a reversion back upwards toward $80, or?
On flat price, no. I think we're going to flush first.
Flush first and then bounce back.
Exactly.
Okay.
I think the next 3 weeks it's going to be weaker than the market should expect, I think.
Huh. Okay.
In my opinion.
No, it's. I mean, I was expecting it to just bounce straight back up. I think the lows are in, and I think we're gonna just grind higher, if anything, or just trade sideways. So
But let's see what the US wants to do today.
Let's see who's right.
Thanks.
Good talking to you.